Let's have a simple chat about the realities of trading, shall we? Now, a lot of people just switch on the YouTube, they look for the latest free strategy. There's a one going around at the moment, which is what they call a box strategy. Now, I have a box strategy, but it's basically London breakout. But the latest one is the box strategy. See it all over on TikTok. And it's basically line at the top of the daily candle, line at the bottom of the daily candle, line through the middle. And if it's at the top line, you are selling it to the bottom line. If it's at the bottom line, you're buying it to the top line. And if it's the one in the middle, you do knack all. The most stupid piece of advice I have seen. But getting the clicks, everybody's looking at it. But also people are losing their shirt on it. Now this leads to where this is all coming from. Because I've had a conversation and some very heartfelt conversations with some guys recently about, I just can't do this. It always goes against me. And it always comes back to the same reasons. It's not the technical ability. Technically, there's a lot of guys in that squad are better than me. They are technically proficient. In fact, someone who is really technically proficient sits right there. She is far better technically than I am, but I'm a better trader than she is. So what's the difference?
Big tits. Huge tits.
Well, actually, mine are probably as big as hers. No. It comes down to discipline. Now, I don't go into this just to take a punt. This is my job. And when I'm at my job, I do my due diligence, my tasks, and I carry out those tasks at the time that they're available. The same as anybody else would in their job. However, in this industry, and that's why I was reverting to that box strategy that was on at the beginning, which is human excrement. You believe it, and you believe it's very easy. Well, this job is easy if you got this bit right. But if you're going in with the wrong expectation, this is the worst job in the world. And it's why I tell more people not to trade than I tell to trade. Now, those that are genuinely interested in the craft, and that's the process of trades and working the art of the deal, all of these sort of little buzzy words that you hear, but you're interested in it, the process, well, the money will look after itself. But if you're in it just for the money, I'm saddened to say you've already failed. And a lot of people will kick off with that and drop in the comments, tell me what you think. You know, but I'm telling you straight, if you're in this just purely for money, you will find this is a horrible job.
Are you serious?
Because you'll come to despise it, because you will hit what's called the wall. And we all hit it. Now, this is going to be the last video I've done for a while, because I'm taking a break. I take regular breaks. I'm away off on my holidays next week, and I won't be back for a couple of weeks. And I've got some pre-recorded stuff that'll start drip feeding out. But personally, I'm actually taking quite a bit of time off for myself. So when you do see a new video, it was recorded this week, even though you're not probably going to see it till end of May or something like that. If you're in the squad, you'll see it now. But for public, it'll be the end of the month, because I am literally taking some time for me.
How dare you? How dare?
Because we all hit something called burnout. Now, burnout is any job's failure point. And why is that? Because even if you're doing it right, you don't want to do it. You just, it's work again in the morning. I've got to go because it pays me. That is the worst place you can be as a trader. In fact, it is suicide as a trader. Why is that? Because if you don't want to do it, you'll just be half-arsed at it. Then you'll start chasing the market and not reading the conditions fully. And if that creeps in, you're on the side of gambling. And gambling will always kill your account. Always. You'll get a good punt every once in a while, and you'll think you're king of the tree because you made 10 pips or 50 pips, whatever it is you're after, but the next 5 will wipe it out, or even the next 1. It's just the nature of the beast. It's what happens. So how do you control this? Well, you've got to just switch the computer off. Sanitize yourself completely. Don't look at it. Don't even think about it. Give yourself a week off. Then come back to chart and see if it still gives you that feeling of joy when you can work it out. But if you have a look at the chart and it has a feeling of dread, but you feel you've got to do it just to earn some money, well, I'm afraid this job probably isn't for you.
What?
And these are the harsh realities that all traders have to go through. You've got to decide whether you want to do it. Now, like I say, I get emails all the time. You know, and it's, oh, I want to do this and I need to earn X amount. And I reply to them and I'll tell them sort of realities, where to look, what to do. You know, tell you right now, don't need to spend a penny. Go baby pips. Look at the education thing there. There's God knows how many modules. Go right the way through it. And what you'll find is that will give you a good foundation. Then open up a paper trade and trade it for about a month. Don't put any money into it, just about a month, just to get a feel of it. Then open up a BlackBull account because you got leverage. And because you got leverage, that means you can open any asset on micro lots. So from there, do 1 trade per day for 30 days. So it's going to take you 60 days of education. But I'll guarantee not many will do it. First thing they'll do is they'll take a couple of looks at the sort of baby pips. Yeah, that's bollocks. I need the latest strategy. So you go back to the beginning of this video and you find the box system because it looks simple. 3 lines, sell the top, buy the bottom. Where's the job in that?
Fuck if I know.
There ain't one. So what you're doing is following a false fable. And that is what's going to cause you burnout, because you'll then see the next one, which is fair value gap. Fucking useless, right? That will be the next golden goose. And it'll work for a little while, then it won't. Then you'll look at the next one, the mini skirt strategy. It's a very old strategy from the 60s, right? But it's basically a retest of a moving average cross. Will it work on a daily pattern? Yeah. Will it work on a 5-minute? No chance. But you want the money, so you look at the 5 minutes. And all of the time, what you're doing is you're bouncing from one to the next, and you'll probably do this for about 6-7 months. Whereas if you'd give yourself 60 days at the start, spend a month of just education, just see what's going on, find out, then you paper trade. After the 60 days, you're going to do small micro accounts because now you've earned the right to do that. You'll probably be leaps ahead of the person that was jumping from strategy to strategy. So my question, I guess, here is, are you system hopping? Are you just constantly looking for the magic pill?
Hell yeah!
Because if you are, you're wasting your time. If you want to survive in this industry, there are a couple of pillars you need to work to. The first one is you need to understand where your levels are. If you can't draw your levels properly and know which ones are correct, well, you're already finished, because you don't know where the stall points are on the chart. You can say, well, there's a swing point there. Yeah, but you don't know why it swung at that point. But if you know how to draw the levels, you would. The next part of it is basic money management. Ask yourself a simple question. Can I afford this? That's as basic as it gets. And you should know you're able to afford it, because if your stop has to be miles away and you're trying to put a £10 a point on and you've only got a couple £100, you're going to lose all of the drawdown straight away. Account's gone. So why you trade small in relation to the account, and it answers that question. So you can afford it. You've got to ask if it's worth it. You're trading what's called free air. You want nothing in its path to the target, but you want at least 2 things in its path to the stop. So what's that all about? Well, it just means if it's running, there's nothing to stop it running. But if it's going against you, at least you've got some shields that'll slow the price down and maybe bounce back. And if it bounces back, it can give you an opportunity to get out. So it's sword and shield. Your target, you use a sword to cut through the free air and get to it. The shield repels and stops you getting damaged. Basic principles. Then you need the final one, which is the big one. You need to be able to do a multi-time frame analysis, but not just off a couple of time frames, because I see it all the time. And they go, well, they take the direction off the 15 minute, right? And when you got that 15 minute, you look at an hourly and you draw a couple of boxes. Right? That'll be fine, right? Then you drop it on the 1 minute, and you know what? You go in the direction of the trend. There's not a fucking hope in hell that's the direction of the trend, because it's so close into where the price is. You can't see the big picture. So you don't actually know what the big boys are playing at. You need to be able to look right the way through the spectrum of time frames, figure out what the average is. That'll tell you roughly what the trend is. Then you need to start looking at what's called bell curve. Now, bell curve is where it's pulling away from the trend, and it may be at a point where it's going to go into a pullback because it gets to a saturation point, comes back down, and then resumes the trend. Now, you see these things with Elliott waves, Bollinger Bands, all sorts of different things. A VWAP is a good way of seeing it as well. But you've got to be able to recognize them. Why? Because the tide will always win. Remember that. If you take anything from this video, it's the tide will win. And what that means is very simple. If you're on a shoreline and you see the sea come in and backwards and forwards on the beach, well, they're your 15-minute charts. It's just going backwards and forwards. But you can't quite see where the tide is. But if you step back up on the cliff or a pier and look, you'll see the sea's creeping up the beach because the tide's coming in. So even though it's going like this on the shoreline, that push up the beach will always win. So the rule of thumb is you go with the tide. Why is that? Because if you get the entry wrong, but you got the direction correct or the tide correct, it will forgive that bad entry. And that's it. That's the secret of trading. Keep it as simple as possible. And if you can't keep it as simple as possible, McDonald's is hiring. So I just wanted to give you something to think about while I'm away. If you watch this, great, share to your friends, all that sort of thing. Do click on the thumbs up because it motivates me to do more. But I need the break as well. But the one thing I'll never take a break from, and I wholly mean this, if I see somebody that is genuinely interested and genuinely trying, I will always answer them. Always.
You must ask the right questions.
If you contact me, I'll always take the time to respond back. You know, can't always give you the right answer. And I think some people sometimes get upset because I don't give them a blow by blow. Well, you do this, do that, and do the other, and you're going to be rich. What I tell them to do is actually invest in themselves with time. Don't look for magic pills. Educate yourself how the markets work, and then understand. Now, some people do contact me and ask technical questions, and I answer them as well. But what you've got to remember is, it's all right asking a technical question, but the answer may be way above your pay grade at this moment in time because you haven't earned the right to understand what that technical is. And the only way you're going to do that is by investing time in yourself and putting a bit of screen time on. Because if I said to you, the Bollinger Band, how does it work? And they'll go, well, it's dead easy. If it's inside, it's fine. It goes to a moving average and it has a squeeze and then it has an expansion. But if I said to you, what are the 4 states of a Bollinger Band? A lot of people wouldn't be able to tell you that. And the 4 states is very simple. It's compression, it's the flare, the weakening, and the collapse. 4 states. But each state has relevance to the market. And you've got to be able to understand what the relevance is in attune to the price. Now, when you're looking at the states on a 5-minute chart, means knack all. But the states up on an hourly and a 4-hour and a daily, they carry a hell of a lot of weight. So you've got to understand what the weighting systems are. Likewise with an RSI. An RSI on a monthly chart is worth knack all, but it's worth a lot on a 5-minute chart. So it's the yin and the yang. You've got to understand where they are and where to use them. Now, just saying, well, if you got a box theory and you put the line here and the line there, doesn't mean anything. But if what it could do, if you already knew what the tide was and it's at the top, you can now decide whether it's going to reverse back into the middle or whether it's going to break out. And then you'll be able to see that by looking at the 4 states of a Bollinger Band through multi-time frame analysis. Lots of different things. Then there's things like island clusters and various other bits and pieces, which are all built round a framework. Now, different aspects of the chart will present themselves every single day. And you've got to be able to know them all. Not just, I put box there and the box there. Hope that makes sense. So if you're stuck, drop down in the comments. I'll always answer them. Certainly email me. You get my contact details on the website, scruffytrader.com. And who knows, I'll speak to you all fresh, maybe in about a month's time. See you all in the next one.